Hey, what's up guys? It's Ezekiel Chiu here. So let me hit you with this. Most traders, they lose not because they cannot read the candlesticks, but because they are reading the wrong story. I mean, they memorize all the textbook patterns, right? They chase every pin bar and engulfing candle, and they wonder why the market keeps taking them out. So here's the truth. Real candlestick patterns are not what you see in the books itself. Real pattern, they show intent, where the momentum is building into, where traders are trapped, and where the true move is about to start. So once you learn how to read candlesticks this way, you're gonna see the entries, the reversals, long before the crowd even knows what happened. So today, I'm breaking down the real candlestick pattern strategy, the 3 pro setups that no one teaches, the ones that work on every chart, every pair, every time frame. These 3 setups, they expose all the fake moves and reveal the real momentum. It gives you clean, high probability entries with zero guesswork. So once you see candlesticks through this lens, you never trade the old way again. So first thing first, candlesticks, I mean, they look simple on a chart, but they are really the footprints of the fight between the buyers and the sellers. So every candle, it shows who pushed harder, right? Who kind of backed off and where the market kind of hesitated. So instead of memorizing the shapes, I want you to think of candles like a trail. When you follow the trail correctly, you will start to see where the pressure is building and where the momentum is kind of fading and where a bigger move is kind of waiting to unfold. Alright, so now I've tested countless of candlestick patterns, techniques over the years, and only 3, they kind of consistently, they held up through all the real market conditions. So these are the 3 candlestick strategies that I use. So I'm going to walk you through each one of them and show you how you can apply them. Let's follow that story step by step and look at what candles reveals. Alright, so we're going to start with strategy number 1. Most traders lose because they chase first break without seeing the trap that is hiding right behind it. So let's break down the fakey reversal. So this is our first strategy. This is the setup that the smart money, they use to kind of flip the entire move. Alright, so strategy number 1, the smart money fakey trap. Alright, so I've seen this pattern repeat thousands and thousands of times. So every single time, traders who understand this fake push in the market itself, what happens is that they end up reading the market with a good level of clarity that most people would never reach. So when you watch a chart long enough, you're gonna notice something strange. The market doesn't break the levels cleanly a lot of times. It pretends to break them first. And that tiny moment, that little fake push, that's where the smart money makes their move itself. So a fakey, it always begins with what? With an inside bar. So a candle that is sitting completely inside a previous candle, high and low. That small candle is not weakness. It's the market holding its breath. So it's the pressure building up. So smart money wants traders to think that something big is going to come up. So they package their trap inside this move. Then comes the breakout candle. So the retail traders, right, they see the breakout, they jump in, they think, oh, finally it's moving. But the smart money is watching the same candle for something else, liquidity. So every breakout, it creates 2 things. There's going to be new entries, there's going to be new stop loss. So that's exactly what the smart money wants. When the breakout, it hooks the traders in, right, the market snaps back, it closes deep inside, back into the inside bar range. That snap is the entire game. It tells you that the breakout traders, they got harvested. So that is the fakey. And the beauty is that the real move that follows after which is no longer random. This move is fueled by the liquidity, the trap traders who get caught by entering in the wrong direction. So now, this is the part that most people, they never learn. The variations are not just about different shapes. They are different traps. So in a bullish fakie, price fix below the inside bar, it scoops back up, it scoops all the losses that is hiding underneath that range, right? And then it reverses hard. So the retail traders, they go short. They think that the market, oh, it's just broke the support level, it's a breakout trade. But the smart money, they use that panic itself as a fuel to get in for the move back upwards. In a bearish fakie, price fix above the inside bar, the buyers, they jump in, right? They think that they caught an early breakout, but the market collapses back right down. It leaves them stuck. So again, the trap is the engine that is fueling the move downwards. So then there is what? The multi-bar trap. This is when the market forms, all right, an inside bar, which you already know, and then 2, sometimes 3, or even more candles, small candles. The longer it stays quiet, the more confident breakout traders they become. So the smart money, hey, we know this, right? So the fake breakout becomes even harder, and the reversal, it becomes even stronger. So if you take a look at this move, price hits the support once, twice, 3 times, and each touch, it builds confidence for the retail traders. When price finally it breaks below the support, woo! All the retail traders is gonna jump in aggressively. Instead of continuing down, what happens? Price whips back up back inside the range, and it forms a clean fakie. So you enter what? At the close of the reversal candle. Your stop loss, you place it below the wick itself. And then your target would be the next logical structure, the next support or resistance level itself. So the move that follows is going to be sharp, right? Because the smart money, it has put all the liquidity on both ends at the area itself, fueling the move upwards. So now, this fakie move, it's a very powerful move. You're gonna see this work over and over again over all the different pairs, whether you are trading forex, stocks, crypto, commodities, it all works, right? So once you train your eyes to spot this, you're gonna stop falling for the same tricks, all the breakout tricks, right? That traps all the traders. This becomes second nature because you are now anticipating it. All right. So now let's move into the next strategy. Strategy number 2, where the market, it reveals a very different kind of pressure. When you learn to read 3 candles as one story, your entries, it stop relying on luck and it start landing with accuracy. Here comes strategy number 2, the 3-bar power sequence. Hey guys, it's ZQ Chiu here. So let me tell you something that you won't hear anywhere else. 95% of the traders are wasting their time following the wrong strategies, using outdated methods, and kind of like guessing their way through the markets. So the indicators, the theories, the guesswork, they don't work. They never will. So what does work? Real market clarity, real strategies, and real insight into how the market actually moves. Alright, so now on the 29th of January 2026, we are bringing you the biggest and the most impactful trading event of the year, the AFM Trading Summit Live 2026. This is a virtual event, right? So whether you are forex, stocks, crypto, commodities trader, this summit is designed to kind of overhaul your trading mindset and to provide you with real actionable insights that you can start using immediately. So you're going to discover how the professionals interpret price movements in real time, why the market, kind of the shift happens, right? And how to anticipate the moves and not just react to them. So you will see live market outlook interpretation for 2026, right? The reasoning behind every move that we take, right? So that you can stop guessing about what lies ahead and prepare for the moves. You're also going to get insider access to the habits that keeps professional traders consistent. How we plan, how we reset each year, how we maintain emotional stability no matter the market conditions, right? Especially at the start of each year. But here's the catch. Seats are filling up fast for the AFM Trading Summit Live 2026. I mean, the max capacity that we can fill in is 1,000 packs due to the platform restrictions. This is your chance to kick off or to reset your trading career and to gain actionable insights that you need to succeed in 2026. Register now in the link below. I use this strategy especially when the market, it kind of looks messy and like directionless. This 3-bar sequence, it cut through all this noise and it shows me where the real momentum is hiding itself. Here's what most traders, they don't realize. One single candle, yeah, it can tell you something, but it doesn't tell you that much. 2, that's good. But 3 candles, that's where the story, it becomes clear. So inside the story, you're gonna see where the momentum is building or dying and exactly where a high probability entry sits at. So now let's start with the 3-bar continuation. So think of this like the momentum catching its breath, but it's not losing strength. The first candle, boom, it expands with force, big body. A clean push, there's no hesitation. Then the second candle, it kind of shrinks a little bit, the color change, then it slows down. So a lot of beginners, they will panic here. Like, oh, they think that
this move is weakening.
But the pros, we see it differently. That small counter candle is simply the market taking a breath before the next push. So the third candle, it confirms it. Another strong expansion that closes beyond the second candle. So when you put them together, you get one message. Momentum pause, but it's not momentum reverse. For example, if price is going up and then a bullish 3-bar continuation pattern, it appears. It means that price may keep going upwards. So what is a strategic entry? You can enter at the close of the third candle, and then for our stop loss, we put it below the wick of the small middle candle. Why? Because the middle candle is like the better point. If price breaks it, high chance the momentum fails. If price respects it, this continuation, it stays clean. So that is why that area is a good stop loss area. Let's flip it. On the other hand, the 3-bar reversal, it works the same way, but with a twist. This is where traders, they often misread. The first candle, it shows strong pressure in the current trend. The second candle matches the color. It can matches, but it can, or it's a different color, it doesn't matter, but it weakens. Then that string is a warning that the push is running out of fuel. But then the third candle, it steps in, boom, it flips the color and it engulfs the first 2 candles in strength. So the bigger the third candle is, the more serious the reversal becomes. So the third candle is not just big. This is like a commitment. It's where the smart money finally steps in with strength, with size, position size. So we enter on that third candle. We set our stop loss behind the second candle, and if the reversal is real, price should not return to that level again. Here's where everything ties together. The power of this 3-bar sequence is not memorizing the patterns. It's understanding how the momentum shift, the move, the pause, the continuation, how the market breathes itself. Right? So once this theory, once this knowledge, it kind of click with you, you're going to start spotting momentum shift before most traders, they will realize that the market is changing. So this is the edge that this 3-bar sequence can give you. The level of timing that separates the experienced traders from the retail traders itself. I use this all the time. Now, let's move into the third and the final strategy, where the candles, they reveal something like even more decisive. Okay, so your best trades comes from one thing: strong candles that the institutions, the big boys, they respect. In our third strategy, we're going to talk about the one thing that stops you from taking all the weak signals. And then this forces you to focus only on the candles that the big boys actually respect. So strategy number 3, institutional candle strength filter. Alright, so this is where everything, it comes together. All the candles, every shift, every clue. So we are not looking at just one pattern in this strategy number 3. We are combining multiple institutional strength candles to make into one clean filter. Alright, so this is the same filter that I used for years to tell what? The real conviction in the market from all the noise on the charts itself. There is a reason that the advanced traders, the pro traders, they are not like overwhelmed by the huge amount of candlestick patterns out there. We are not scanning for, oh, this shape matches this shape matches that. No. We are scanning for strength in the market itself. Alright, because the institution, they don't care what a pattern is called. No, they care whether the candle, it shows real pressure, real imbalance, real intent. Let me show you how this strength filter works. The two crow pattern, it shows up when the market is climbing, but the buyers, they start losing strength. It begins with what? A strong green candle pushing up higher. Then a red candle appears, opening inside the previous body and closing lower. That shift, it tells you something important, that the sellers have now stepped in and the momentum is changing. Another one, the 3 inside up and down. Let's talk about this. This pattern, it looks simple, but it worked really well. For the 3 inside up, the story starts with a big red candle pulling the market down. Then a small green candle forms completely inside the body of the red candle. It's like the market catching its breath. Then the third candle seals the deal when it closes above the first candle high. This confirms the bullish reversal. If you see, earlier on, I talked about the 2 crows pattern, which is a combination of pattern. It shows you that the sellers have stepped in, the momentum is moving. Now I'm showing you the 3 inside up pattern, whereby the market takes a rest in the middle, catching its breath, and then the third candle seals the deal. Earlier in strategy number 2, I show you the what? The 3-bar sequence. If you see, I'm going to keep going through the list. It all boils down. You can take screenshots of all the different strategies, the different patterns that I'm going to show here. But it all boils down to one thing. These patterns repeat through all the charts itself. I'm trying to show you through all the different patterns that I'm going to show you here and the intent behind it, so that the next time when you read the chart, you now truly know what is happening behind it. Alright, so now, if you look at the other one, the 3 outside up and down. So this is the complete opposite of the 3 inside pattern. So now, the 3 outside up is a strong bullish reversal. It begins with what? 2 candles forming a clean bullish engulfing pattern. Then what? This shows the buyers are in control, correct? It's an engulfing pattern. Engulfing pattern means buyers are in control. Then the third candle, it pushed even higher. This confirms the shift in direction. Get it? So this is a 3-bar sequence as well. So on the other hand, the 3 outside down is the same thing, but in a downwards movement, right? This is a bearish reversal pattern. It starts with a bearish engulfing bar, strong selling momentum already. The sellers have wiped out the previous candle's buyers. The candle steps in, closes lower. This reinforces the sellers are now driving the market downwards. So now, let's go on. This is where the beginners, they finally start trading like professionals. Patterns like what? Here's another one. The on neck, the in neck, trusting lines, right? They are often misunderstood. Most traders, they see them as what?
Yeah, oh, this is a 2-candle continuation setup.
Right? But the institutions, the big boys, they look at them as what? Efficiency plays. A strong continuation candle must not return too deep into the previous body. If it does, the continuation is not clean. It is hesitating. So now, the on neck line is a simple 2-candle pattern that shows up in a downtrend itself. So the first candle, it pushes lower, and then the second, it opens with a gap down, but barely, it barely lifts from the ground. So it opens with a gap, so it's around the same area, the opening and the closing itself. Closes right near the low of the previous candle. So this tells you that the sellers are still fully in control. The bearish move is likely to continue downwards. Now, here comes what? The next one, the in-neck line. It looks almost the same, but hey, there's a difference. The second candle closes just a little bit inside the body of the first candle. So there's no gap this time around. And even with that small push forward, the message stays the same. The downtrend is still intact. So the difference is actually the gap, but the directional basis, the bias is still the same. Now, next, another pattern, the trusting line pattern. This is another bearish two candle continuation pattern. The second candle, it opens inside the first candle body, but this time it pushes higher and closes like more than halfway into the first candle. So even though it rises a bit more, it still reinforces the idea that the sellers remain in charge and the downtrend is likely to continue. Let me give you one last one. This is one of my favorite patterns. This is a continuation pattern, the Marubozu candlestick pattern. This is very powerful and it rarely appears on higher time frame because of how strong and decisive this is. A Marubozu is a clean, solid block. There's no wick at the top, there's no wick at the bottom. It means that the market opened and went straight in one direction without any pushback. You can have a bullish Marubozu driving the market upwards or a bearish one driving it down. Both are equally strong. So when you see this, it's a clear signal that the trend, it has a lot of strength behind it. And if you are already in the trade, it's often a solid reason for you to keep holding on itself. This is how you read candlestick like institution, like the big boys. I'm trying to tell you, you're going to see all the different patterns, all the different names. I'm not asking you to remember the names. I'm trying to show you with all these patterns, what we are trying to do is to read the intent. Marubozu, one big bar. Sometimes there's a continuation, right? Whether there's a gap, there's no gap, you got to see the size of the bar, what that means. You can combine 2 bars, you can combine 3 bars. But essentially, once you understand, go through this part bit by bit again to kind of like reflect on the intent behind it. And then when you look at your chart, when you start seeing this pattern combine, when you keep looking at them and keep looking at them, you're going to start understanding the intent behind it. That's where the next time when you trade, rather than just plugging in any strategy, the candlestick will now tell you which direction the market will likely head into. So when you have that understanding, you can then use the correct strategy to plug into it. For example, okay, I'm going to enter on a pullback. Oh no, I'm going to enter on a reversal. Oh no, I'm going to enter on a breakout. And this all strategies starts with understanding how the market candlestick actually move, the intent behind it. Good? Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below and I'll see you inside the training.